again, and welcome to our look at the upcoming December 23rd trading session. We are getting close to Christmas, of course, so liquidity is going to start to enter the picture as being a potential problem. However, let's take a look at what is on the calendar, and it's GDP. It's GDP out of both the United Kingdom and GDP out of the United States. Durable goods orders also coming out of the U.S., but really GDP is going to be the headline number for all markets. The British one, of course, will move the pound in the FTSE, and the GDP out of the United States will move the stock markets and the U.S. dollar. With that, let's take a look at a couple of trading charts. So let's look at the currency market first. You can see that the British pound is kind of just meandering right above the 1.56 level, and quite frankly, I really don't see much in the way of movement one direction or the other. I think that probably the best trade is to simply wait for this to bounce a little bit and perhaps buy puts, as we should continue the consolidation. A blowout number in one direction or the other could cause more volatility, but quite frankly, this time of year I would anticipate more sideways action. You can see that the FTSE has gone higher during the session on Monday, but it's pulled back to form a shooting star. The shooting star, of course, signifies that we should go lower, and with that, put buying opportunities could exist. Truthfully, though, need to see 65.50 closed below in order to even think about that with any significance. The safer trade is probably to let the market pull back, look for some type of support, and buy short-term calls. Over in the S&P 500, you can see that we continue to struggle near the 2080 level. Probably going to get a little bit of a pullback, but that pullback should represent value. I'm looking for supportive candles below on short-term charts in order to take short-term calls to the upside. And finally, over in the euro, you can see that we have bounced a little bit during the session on Monday, but given up about half the gain. So really, at this point in time, I really feel that every time we rally on a short-term chart, it's probably a put buying opportunity. Going to be very low liquidity. Going against the trend is most certainly not recommended at this point in time. So, having said that, we will just continue to look for trend following opportunities for little gains here and there. And with that, we've looked at the Tuesday, December 23rd trading session.